Hey, welcome back to Cheryl Trades Leaps. If you're new here, this channel is about learning how to trade smarter, not harder. And today we're talking about something that doesn't get enough attention. It's not about which stock to pick or when to enter a trade. It's about what happens to your decision making when you're losing. Because that's actually where most beginners get hurt. Not on the first loss. On everything that comes after it. So let's get into it. Right now the market has been really volatile. Even solid, well-known stocks have pulled back hard at certain points this year. And what that means for a beginner is that you might be doing everything right and still watching your positions go red. Good entry, good reasoning, and the trade is still down. That's a normal part of trading. But here's the problem. Your brain doesn't know that. When you start losing, your body actually releases a stress hormone called cortisol. It's the same chemical that kicks in when you feel physically threatened. And when that happens, your thinking shifts. You stop asking, is this part of my plan? And you start asking, how do I fix this right now? That mental shift is where most beginners lose real money. Not on the trade itself, but on the reaction to the trade. The next thing that happens is your brain starts looking for patterns that aren't there. You start thinking, okay, I've lost 3 times in a row, the next one has to go my way. This is called the gambler's fallacy and it's extremely common. The market doesn't keep score. It doesn't know you've had a bad week. Wins and losses don't take turns. They're random. You can follow your strategy perfectly and still lose 5 times in a row. That's not failure. That's just how probability works. But because our brains hate randomness, they push us to do something. So beginners start sizing up their trades to make back losses faster. They start forcing entries that aren't really there. They abandon the strategy that was working and start improvising. And before they realize it, they've turned a manageable drawdown into a serious hole. So what do you actually do when this happens? The first thing is to stop. And I don't mean take a 5-minute break and come back to the same charts. I mean fully disconnect. Close the app. Go outside. Give it a day if you can. The reason for this isn't just to calm down emotionally. It's biological. You need your cortisol levels to come back down. You need your thinking to become clear again. Willpower alone won't do it. You have to physically step away. When you come back, before you place any new trades, you do a short honest review. You ask yourself 2 questions. Were these trades that fit my rules but just didn't work out? Or were these trades I took because I was emotional and trying to recover? Those are completely different situations. The first one means your strategy is fine and you just hit a rough patch. The second one means you need to reset before you trade again. Now here's the part that beginners struggle with the most, but it's the most important thing I'll say in this video. When you're in a drawdown, your goal is not to make your money back. I know that feels wrong. I know every instinct is telling you to get aggressive and recover fast. But that instinct is what makes small losses turn into big ones. What you actually do is reduce your position size significantly. To the point where the result of any single trade barely moves your account. This feels uncomfortable because part of you wants to speed up the recovery. But mathematically, trading bigger when you're already down just digs the hole deeper. And psychologically, it puts so much pressure on each trade that you can't think clearly. Instead, you trade small and you give yourself one simple goal. 3 clean trades in a row. Not profitable trades. Just trades where you followed your rules start to finish. That's it. Because what you're rebuilding isn't your account balance. You're rebuilding your execution and your confidence. And those two things are what your account balance actually depends on. The last thing I want to leave you with is a different way to think about losing streaks altogether. A drawdown is not a sign that you're a bad trader. It's information. It shows you exactly where your discipline breaks down. It shows you which rules you actually follow and which ones you only follow when things are going well. Every experienced trader goes through drawdowns. The difference between someone who makes it long-term and someone who blows up their account is not that one of them avoids losses. It's how they behave when the losses come. The market is always going to give you another opportunity. But only if you still have capital and discipline left when it shows up. So if you're in a tough stretch right now, slow down. Reduce your size. Focus on clean execution. That's not giving up. That's how you stay in the game long enough for your edge to actually work. If this was helpful, subscribe for more beginner-focused trading content. And I'll see you in the next one.